Welcome back, everyone. We're live on Facebook, so hi to everybody out there. Like us and follow us. We will share the show later on. I've got with me now Paul Gubin, and he's with VIP Mortgage. You want to tell everyone, you are a reverse mortgage specialist. Welcome to the show. I want you to tell everybody who may not know what a reverse mortgage is. Get up on that mic so everybody can hear you.
Thanks for having me. In its simplest terms, a reverse mortgage is simply a home equity line of credit. It's in a first lien position. And it provides liquidity for any homeowner's needs in and during their retirement.
So I'm going to do something that I do with people that get a little nervous, okay? Because when newbies come on, they get nervous, I get nervous, okay? I'm going to talk to you from me right here, okay? What is the number one myth that comes to mind when it comes to reverse mortgage?
I'm going to lose my house.
Right.
You know, and I think back in the day when these loans started during the Reagan administration, they had the foresight to go, what are we going to do with all these boomers in 20 years when they're doing Medicare and Social Security? How can we help them retire and stay retired? Doing FHA, knowing a lot about the loan business for first-time home buyers, they came up with the idea of the reverse mortgage. But it wasn't as refined a product as it is now. There's a little bit of underwriting. And so what happened a lot of times with homeowners, forgot, frankly, I better pay my taxes because I still am a homeowner. And before you know where you live, someone's knocking on the door and wanting the keys. That was the biggest thing about I'm going to lose my house. I heard that the value could go down. Well, it could go down, but there's a lot of protections in the loan right now. So the opportunity to do what you want to do and have as part of the equities you can spend is fantastic.
The cool thing is it can give you peace of mind.
That too.
I think that's one of the biggest things, but there's so many things about it. It's changed so much. I told you my dad had one in 2010. His financial advisor is the one that told him about it, and you know, he didn't realize that his mom, my mother, who had passed away, that Social Security went as well, and then it was like, ooh, that's a little tight. And in those days it wasn't as great as they are today.
Right.
I want to talk a bit about some questions that I have too. When someone talks to you, you do free consultation.
Of course.
Right? You're going to sit down and talk to him. You're licensed, you said, in 5 different states, but VIP is in...
We're in 40 states in the country, and we can do the reverse HECM loan in all those states.
Write this number down, 602-320-6090. You can check him out on his website. We're going to change it at some point because it'll make it easier for people, which is Paul Gubin. VIPMTGINC.com. Don't worry about that. I want you to write the number down, which is 602-320-6090. If you've had any thought about this, have that consultation with him because they're really terrific. They really, really are. If a homeowner has an existing mortgage on their home, can they still do a reverse mortgage?
Absolutely. It's a first lien mortgage. About 63% of what we're doing in originations right now, we are paying off their existing loan, replacing it with the reverse mortgage. It eliminates the mortgage payment and provides liquidity as well, while giving them still a whole lot of equity for the house to still go up in value and create more equity for the heirs.
I told you, I know people have bought homes with a reverse mortgage.
I'm working with a client right now who's looking to right size. She's just getting into Social Security, and she just sold her home this morning. She's looking to move up north. Now she's got the money and she's right sizing. She can live free and clear, and she's got money left over from the sale of her home to put away for advisors who want to manage it for a savings account, for a CD, things for a rainy day.
And you know what I love is that you said right size. You know what, people were saying downsize, right size, make it the right size for you. Is that what you mean?
It is, because in retirement, downsizing, people always assume, I'm just going to buy this home. But you could be moving from an area of the country where you maybe sold a house, have a lot of money. You might be in the valley where you have so many different lifestyles we can live, and you might be able to buy a home and not have a mortgage payment and keep a significant amount of money, and you're going, I can't believe we can do this.
Retirement is totally different today, and what you're doing is different. How old do you have to be?
Somebody has to be at least 62 years old to do this loan.
Yeah, so you see, 62, at 62, you're ready to still do lots of stuff.
I think so.
That phone number again, to put it in your phone or write it down, it's 602-320 320-6090. He's licensed in 5 states, or they can actually, they're in 40 states, he said here. He does free consultations. I think it's something that people need to talk about. Everybody's story is different.
It is.
Right? And you don't know until you have that conversation. So do homeowners have protection with the loans as they age in place?
Great question. So yes, part of the fee that FHA charges will give you, it's a non-recourse loan. And by that what I mean is, they can't come back to you if you live in that house so long, because it has to be your primary residence. It's got to be that. Somebody has to be 62. And you got to do the responsibilities for homeowners. You have to pay your taxes on time and your insurance and the HOA. But if you live in that house so long as your primary residence, way past, say, life expectancy, and then we have like an 08, and something were to happen, and now you've either passed away, or maybe you need to go live in an assisted living, or perhaps with one of your kids, right? If you're upside down for any reason, FHA cannot file a judgment for the difference against you, your estate, or your heirs.
So what happens to the house when someone passes away?
Another great question. So if there's equity in the home, you find your realtor, you list the house, you pay off the loan, you take the proceeds and go on down the road. Heirs can come in and they can buy it for 95% of the appraised value, if they have the money to do that, to take out the existing reverse and put a new loan on it.
My dad used it just for peace of mind, and he didn't even touch it. He just kept it in the bank, so he knew it was there when it was ready to go. It was already sitting there. He didn't need it. He used it again for that peace of mind.
I like hearing that, and it sounds like somebody gave him some financial advice. It's buying the umbrella while the sun shines out, and then whatever you need, I don't have to go in and apply for it. I don't have to do credit reports and appraisal. The line actually grows at the interest rate that they're being charged, plus 0.5%. So, and they can't freeze it. So, it's built to grow with you and expand through retirement.
There's so much to talk about these today. You can go on forever, really. And there's stories of the people that have had successful ones, and most of them today are. It's not like it used to be years and years and years ago.
It's not the reverse of your dad's generation.
No.
And they are actually creating great outcomes in retirement.
And I'm here to say, I mean, I was the child of one, because everybody's always worried, well, what about my heirs? What's going to happen? You know, and I'm here to say it was fine. It was no problem whatsoever. Sold the house, got the money, and, you know, it was no big deal. What's one thing that you want the public, especially those planning for retirement, to know?
Another great question. I don't think people are ready for retirement. You've had advisors on and all that, and things to live in the right question. To be able to have liquidity for anything, whether it's a vacation, you want to fix up your house, right? You've spent all this time building assets, taking your income, turning it into assets. Now we want to take our assets and turn it into income. But like they say, you've got to be careful in retirement, because every day could be Saturday. That's what I would want to put this in place now and let it grow so that you have that bucket, especially for expenses right now if you're retired. You go to the grocery store, you might need a supplemental cash to cover the medical expenses that Medicare doesn't. Life isn't going to stop because you got retired.
Right. I'll tell you something, folks. What's really important is everybody has a different story, and you don't know what you don't know. So the best thing to do is to have that consultation and find out, where do you stand? If you own your own home, and by the way, you know, even if you have an existing mortgage, you can still, it's so different today than it was. So it makes sense to have that consultation. It's free to find out the information, and that's all it is. It's just some information, and information gives you power. His phone number again, it's 602-320-6090. You can check him out on his website. It is Paul Gubin, GUBIN.VIPMTGINC.com, or the best thing to do is just give him a call. He's a reverse mortgage specialist. Please, also, another thing I want to tell everybody out there, go to somebody who only does reverse mortgages. Only, don't just go to anybody. That's really important too. We can talk about that all day as well. There's a big difference. Again, put the number in your phone. It's 602-320-6090. Give him a call and find out how he can help you.